Welcome to this video. What we're going to be doing is looking at a potential event in the global economy coming up, which could trigger huge volatility. And we're going to be looking specifically at China. It's already slowing up, and there's a high probability it's going to have a hard landing or even crash. Now, in terms of BRexit, that triggered huge volatility in the markets, but BRexit is a minor event compared to a hard landing or crash in China. Now, in this video, what we're going to do is look at why the probability is so high of a hard landing in the coming months, and then what forex pairs will be affected. Okay. Now, in terms of China's crisis at the moment, it's still one that people think that China can solve. The vast amount of economists and broker analysts and so forth think that China can solve its problems. What I want to do first of all is start off with some facts about China. I'm just going to put them up on a screen here, and the facts only last for a couple of minutes. Now, when you've read them, you'll think, well, that's bad. But if you actually understand the facts in relation to how the Chinese authorities are going to respond to them, and why they're going to respond to them in the way that they are, it makes it look a whole lot worse. But let's first of all look at the facts just on this screen. I'll be back in a couple of minutes to discuss them and elaborate on them. Welcome back after that short summary on the facts in terms of China's debt and the economic model it's been pursuing. I also started with a quote from respected Chinese economist Andy Zhi, finished off with a couple of quotes from George Soros, and they were pretty gloomy. When you look at those facts, you can see why. The fact I find absolutely staggering is that one on cement. But in terms of the construction boom in China, it's been absolutely massive. I'm sure everyone has seen on TV the ghost cities where no one lives, with highways between them, with no traffic on them. Now, the construction boom was basically just to create jobs. So it's not really growth that is going to help the economy long term. At the same time, it also created debt. Now, in terms of China, other bubbles have grown up. Obviously, the property bubble, and you also have a stock market bubble, and you've got debt across all levels of society. Now, China, very much an export-led nation, has seen its exports going down. It's got huge overcapacity in industry. Now, in terms of that overcapacity, what are they going to do? They're terrified of unemployment, mass unemployment in China. It's historical to do with social unrest. China's had 4 civil wars that have been in the top 10 of the most bloody in history. Controlling China and basically avoiding mass discontent is a huge issue, very historical. Now, obviously, we don't have enough internal consumption in China, so the Chinese, in their view, will need to boost their exports. So how do they do it? Well, what they're going to do is basically devalue the yuan. They've already started moving the yuan gently lower. It's down at levels as low as they've been since 2011. Now, in terms of getting the yuan down, that means they can get their exports more competitive, gaining competitive advantage, join the currency wars. However, there isn't enough global demand, even if they do push the yuan lower. Okay, now if they do devalue the yuan, they'll export deflation around the world and cause a huge crash in the financial system. And you might be thinking, well, will they still do it then? Well, I think you've just got to look at it from a Chinese point of view. They will do everything they can to basically avoid the hard landing. And you've got to remember, the people who dictate the economic policy in China, most of them do not have any real background in economics. It's a very young capitalist nation. I mean, I know it's not fully capitalist, but it is capitalism of a sort. So I think they see that as the best short-term fix, or only short-term fix. Now, I know they're doing their best to get structural changes within the economy, move towards a more consumption-orientated model, but I think it's probably a little bit too late now. I just don't think they've got enough time. Now, the yuan coming down slowly already is a warning sign. Everyone has been preoccupied with BRexit. China is a far bigger problem if this crash actually does come. I do think there's such a high probability when we've looked at those facts. And in terms of the global economy, we will face the biggest financial crisis. It'll be bigger than 2008 for sure. And it's going to trigger massive volatility in the market. So in terms of forex pairs, which ones do you need to look out for? Well, China is a massive importer of commodities. So it's going to be obviously the commodity currencies and the emerging market currencies. Now, in terms of currencies that are going to go up against them, it's going to be the USD, Safe Haven JPY and Swiss franc. Now, if this does come to fruition, you are going to see 1,000 to 2,000 pip moves. Now, what I'm going to do in the separate videos is just look at a few currency pairs in relation to the China problem, and basically explain where I think they could go. And the first one I'm going to do is the Australian dollar against the US dollar. And I actually think the Australian dollar is going to come down on the USD anyway, but a hard landing in China will see it really collapse to the downside. Now, we're trading near 75 as I do this video. I think it can easily reach 2008 lows at 65. It'll probably overshoot that to 60 or even 50 if we do have this event. And the one thing I'd stress is when this event comes, central bankers, I think, are going to have a real problem controlling it. They got away with it in 2008. I'm not so sure this time it's going to be so easy to get out the problem. Now, I'll be doing a video on the Aussie dollar, US dollar shortly. You'll see it next to this one. But in this video, I just wanted to really give you a general background to the problems that China faces and the probability of a crash. Now, we all hope, obviously, this doesn't come to fruition, but it just looks like it is going to. It just doesn't look like there's any way out. Okay, we don't exactly know when the crash is going to come. We've got the warning sign of the yuan being pushed lower already. So how far are we away from a really big devaluation in the yuan? to trigger massive volatility in the global financial markets. I think pretty close. Thank you for watching this video as usual. Ever got any questions or queries, please feel free to email me.